Welcome back, everyone. Today I want to share a story with you. Unfortunately, though, the story that we're looking at is kind of like a tall tale. It is a warning to investors, and I think that this is becoming a more common problem. This is the story of an individual, someone that decided that his job was difficult, he was in a rough situation, and he decided to take on a very high-risk form of investing, and how he lost nearly $400,000, almost everything that he had. And like I said, this is a bit of a tragic story, and I see this becoming more of a widespread problem. So I'm going to read through this, and I want to go through it with you. I think it will be very, very educational. He says, I was 26 and stupid. I'd arrived in the US when I was 18. I didn't have money and worked a shizzy job to get through college. I didn't go to a nice school, and I've worked in sales ever since I graduated. My first job paid me $40,000, the next one $50,000. So I basically only started getting money like 3.5 years ago when I got a good job and I was like, oh my gosh, this is really great. I can relate to that. I've worked quite a few bad jobs. I've worked some jobs in sales and customer service and other things that aren't the most fun jobs, at least for me. And I know people working in those jobs, they're not fun. If you're in one of those, there's better days ahead. Things change. He says, I had no other passions other than really earning money, just stacking it up. So I worked and saved up quite a bit. That's all I did for 3 years. And I just needed to do something else to kind of take my mind off work. Because if I kept working like that, I'd go crazy. And investing seemed like a thrilling thing to do, fun journey. It was kind of like gambling. He's correct here. In a sense, investing is like gambling. In gambling, you can use you play strong hands, you use strategy, you can do things to kind of sway the odds in your favor a little bit. But investing does differ greatly from gambling in a couple key aspects that far and wide investors make money over time. On average, they make a lot of money. In gambling, your future expected return is negative. If you do it enough, you're going to lose money. So there's a pretty substantial difference there. He says, I am super conservative. I don't spend anything. My monthly expenses are around $2,500 a month, and I pay $900 a month in rent. The 3 biggest purchases I've made in the past 10 years were my laptop in 2014, which was around $1,500, my car in 2017, which was around $2,700, and then recently I purchased a new iPhone, which I'd never done before, around $1,300. I usually use my mom's old phones when she gets new ones. So he's really not spending enough money here. In my opinion, if you're earning, upwards of $60,000 plus a year, you can buy a new phone. It's okay. We're only here for a short time, right? We don't live forever. You shouldn't go 10, 20 years with just saving and literally doing nothing else. I think that's a mistake, in my opinion. There's a lot of studies that actually show that people that treat themselves to things more frequently just have happier lives. So spend a little bit more of your money than this. This is not enough to utilize your money in a good way. He says, it'll come off as stupid, but I consider myself conservative from an investing perspective. I had $300,000 in a high yield savings account, and I made like $1,000 a year on it, which is ridiculous. But I had been following the market pretty constantly. My job involves a lot of researching companies and trying to understand business and economic models. I like to read a lot, and there's a lot of books on investing. This is all smart. Understanding businesses, understanding economic models. So far, I'm with them. I put chump change, like $3,000, into crypto. This is where things get dicey. The filter when you first go into crypto, he says, when I only had $5,000 to begin with in 2017, and I lost all of it. If only he had invested in Bitcoin in 2017 and just held on to it. But I was seeing everybody making money hand over fist, and I wasn't. He says, I work in tech, and a lot of my colleagues were worth like 10 million. That seems a little high. I worked in tech too. I don't know too many colleagues worth like 10 million. Anybody that had equity in the companies that I worked for, they would have a lot of money if they were successful companies. But that seems pretty, I don't buy that. Not every tech employee has $10 million. That seems a little far-fetched. He says, but the big tipping point was GameStop. It was ridiculous, and I just got greedy and had FOMO. This is a problem right here. I can tell that he's already assuming everyone else around him is super rich. If he thinks that a lot of his coworkers had $10 million and everybody's getting rich from GameStop, that is survivorship bias. Those are biases we have where we only see, and our brain only remembers the success stories and not the other people that aren't quite as well off. He said, it didn't start with Alibaba. This is where Alibaba comes into the story. He says it started with $5,000 bet on AMC. Then the 5,000 became 15,000 when I bet on something else. Then it became 50,000 when I bet on silver. This is another pattern I see all the time with new investors that get into day trading. The best thing that can happen to someone going into day trading is losing a good amount of money on the very first trade. The very first couple of trades losing money. Because A, they'll either realize that it's not easy money and they'll quit right there, or B, they'll take it seriously. They'll know that they can lose money doing this, and it's painful. They feel the sting when they lose money. The worst thing that can happen is you get really lucky, you make money on your first couple of trades, and then you get a false sense of confidence and you start piling more money into it. He says the first bet was 5,000 on AMC, then the 5,000 became 15,000 when I bet on something else, then it became 50,000 when I bet on silver. So now he's a repeat gambler making these bets on different things. He says, and that's when I was like, okay, I'm done with this. Now I want to buy a safe bet. And the safe bet was Alibaba. It had fallen from 330 to 245. And he's not the only one that bought into this being, a great asset at a discounted price. I've done the same thing, right? I bought into Alibaba as well. So he says, but I had wanted to find a company where the price to earnings ratio is low. That's Alibaba. It has a very low PE ratio, especially compared to US technology companies. And every single analyst had a buy rating with like a 40 to 50% upside on it. Morningstar did as well. TipRanks did. He says, looking at TipRanks, my understanding was that this was a very, very safe bet with a limited amount of risk. I don't know where he got the idea that Alibaba was a safe bet. When I made my video on Alibaba and my bull case and thesis on it, I highlighted many times, this is a high risk bet. This is something that I'd position as a small portion of your portfolio. And personally, even though I think it's a good company at a discounted price, I'm only limiting the amount of money that I'm putting into it to 10% of my portfolio value because it is a Chinese company. It does have risk with the government. The concerns about Alibaba as an investment, that it is the Chinese government running it and they're somewhat unpredictable, is a very valid concern. But he says that it looked like it was a safe bet with a limited amount of risk. Then I just went all in on this one single stock option. And option is a key word there. This isn't just buying the stock. He doesn't just have ownership of the stock, but he went on a stock option. The $200 strike price call option on Alibaba. Now he goes on to describe what a call option is. He says, I would describe a call option as a leveraged bet on the underlying stock, which helps you increase the upside or downside of the bet that you're trying to make. So basically, a call option is adding leverage to buying the stock. You're buying it, but whatever returns you get, upside or downside, are heavily dramatized. And our minds really have a difficult time understanding how leverage works and how powerful it is. But if the stock goes down, you lose a lot of money. If it goes up, you gain a lot of money. I initially invested $300,000 in February, basically every single liquid asset in my account. Not retirement, but everything cash. I didn't have anything left. My thesis was I might not make a lot of money, but I won't lose much. That's where he gets this wrong. Assessing the downside, he does a terrible job of assessing the downside. The downsides seem limited, and that if worse comes to worse, it could go down to like 280,000. Now, I have no clue where he's thinking that Alibaba can't keep falling. Like, investors don't need to sell a company. They're not able to panic and sell out of a company. Any company can trade down 50%. Apple could, Amazon could, Google could. Any company can trade down 50, 60% in a month. It can happen anytime. The company can be in good standing. It can have a good foundation and fundamentals. It doesn't matter. The current price is based off of supply and demand and people trading the stock. If big institutions try to sell out of a stock and there's not as many buyers, the stock price will plummet. That can happen at any time. So I have no clue where he's assessing the downside and saying that Alibaba has a downside of like 10%. That seems insanely inaccurate. Like, I don't know where he's coming up with that. Peter Lynch has a great saying. He says, it's always darkest before pitch black. And that's his way of saying, just because a stock has fallen a lot and it seems dramatically undervalued right now, doesn't mean it can't keep falling a lot. Alibaba could go down to $50 a share. That is not out of the realm of possibility. Anyways, he says the price started to continuously drop almost from the get-go. I was watching it night and day, and it took a mental toll. The issue with Alibaba is it's a dual listed stock. It trades in Hong Kong and in the US. So all day you're watching pre-market and the opening in Hong Kong, and then again in the US, Monday through Friday. You're constantly watching it. So he's obsessed with the stock, watching it every minute of every day. My mom told me on April 13th, get out today. Best advice from his mom. Someone sensible there, someone from a third party saying, you're making a mistake. I'm your mom. I love you. I care about you. Get out of this stupid stock. And it might have been ego. It probably was. It might have been just stupidity, ignoring the facts, but my conviction was high. I think it was greed. He's not listing out the real reason why, but greed's a big factor. He wanted to make money. He wanted to be right with his bet. Now he goes on saying that if you listen to the smart people, they all said it would go up. So I was like, hey, this is going to rebound. I said that Alibaba would likely go up over time, and I think Charlie Munger has said the same thing. I think Monish Pabrai has said the same thing. But nobody that I know, no analysts, not Charlie Munger, none of the bigwigs, said to put your entire portfolio in Alibaba with time-sensitive leveraged options. No smart person's telling you that, because if they were, they wouldn't be smart. That's not advice that they would give out. Nobody's saying to do that. Charlie Munger has a hold time of like 20 years. He buys companies for the next like 2 decades. So he's not buying call options on Alibaba. He goes on saying, and as my salary came in, I saved another 100,000. So in July, I put in almost another 100,000. I basically transferred all the liquid cash that I had and maxed out my account. If my company had not paid me by the end of July, I wouldn't have made my rent payment on August 1st. My mom told me not to do it, and I still did it. I feel bad for his mom. I can't imagine, I have kids. If you were watching them self-destruct their finances, that would drive me nuts. I could not sit idly and watch my children blow money into flames and just destroy it. That would be incredibly difficult. So I feel bad for mom here. I think she's probably in a lot of pain watching her son go through this. Anyways, he continues on saying, and I still did it. When I invested the other $100,000, she told me to sell tomorrow, sell tomorrow, sell tomorrow. She's literally pleading with them to not do this. I didn't listen. It was stupid, an extreme level of greed and risk-taking. There's the greed. This is what's inherent with every time people want to make quick money. It is greed. Whether you like to admit it or not, this level of greed is not good to your financial future. If you're suffering from FOMO or wanting to make quick money, most likely you're going to lose it. So you're going to learn the same way he is. Over the next 10 days after that, it dropped by another 30%. It was fully out of the money then. And out of the money means below the price at which the option owners can buy or sell the underlying security. So basically, he can't own the stock anymore. He has lost all of his money. There's the screenshot of it. And if you can't see it, it says minus 100.00%, $374,000 down the drain. All of it gone. The whole $400,000 turned to almost zero. It was at that time that I knew there was no coming back from this. I was literally begging for it to come back so I could get out at 300,000. Just praying. Like once you go from desperation to literally praying, and I'm not even religious. Losing this much money at once, I think, will make you religious. But the truth was, I was still somewhat optimistic. I still had $75,000, and I was hoping that Alibaba would make a recovery, which of course it did not. My next thing was, okay, how do I earn all this money back? But it fell from 75,000 to 50 and so on. I was pretty depressed for like a month or two. I knew that I'd messed up and felt stupid. I was so unhappy that my parents didn't want to make me feel more stupid. Sure, my mom told me off a couple times. Good for her. You need to hear it from someone. But she was also supportive because she knew I was already beating myself up. I should have listened to her. She told me to diversify a little. Don't go all in on one. But I felt like because she told me not to do it so many times, I actually had to. She's talking truth. Why are you being, why are you pushing back against what your mom's saying? Diversify a little? There's no need to go all in on one stock. That is just a pride thing. When people do this and they go 100% with this amount of money into one stock, I don't think there's any rhyme or reason behind it other than just pride or greed or stupidity. Even Warren Buffett, the person that says to go all in on one stock, is talking about Berkshire, a company that has like 100 companies they own, or Microsoft, which owns 5 different companies. But going all in on Alibaba, a Chinese company, and then using leverage options, I think is incredibly, incredibly stupid. I sold and shut down my Robinhood account in October, right before my birthday. I decided I don't want to have this hanging over my head. The day I sold it, I was like, you know what? I effed up. It was a mistake, but clean slate, dust yourself off, move on. I felt better when I sold, much better actually. Now he summarizes saying Alibaba today is trading at 125, which is almost half of where it was at the beginning when I bought it. In retrospect, it's extremely obvious that it was a stupid decision from a risk management perspective and from a basic investment fundamentals perspective. Now, this is not something that you can only judge in retrospect. I would have told him this is a stupid decision before he made it, or as he was making it. And it's not just in retrospect. Man, your mom was telling you, as you were making the decision that this was dumb, to get out, to get out, to get out. She was warning you over and over again. Not just in retrospect, right when you were doing it, before you were doing it, many people were actively telling you this is a dumb decision. So you can't just judge this by the outcome. Many people make poor decisions financially that turn out luckily in a good situation. They make money off of risky bets. That doesn't make the decision good. You can't judge them in retrospect. The decision that you made at the time was a poor decision, even if you made money on it, even if it turned out good. That doesn't change the fact that you made a poor risk assessment. He says it's a combination of ego, greed, overconfidence, and FOMO. Still, if I could do it again, I wouldn't have put in the other $100,000, but I would have still made the initial $300,000 bet. Why would you make the same dumb decision if you could go back in time? Even if I would have lost it all. That doesn't make sense. If I make a bad trade and I could go back, I would not have made that trade if I could go back and see the future. Had I not gotten this lesson, had I not lost the $300,000 now, I would have thought, hey, this is something within my circle of competence. You don't need to lose $300,000 to learn what's in your circle of competence and what's not. I've learned things where I shouldn't venture into. I've lost money on different mortgage REITs and stuff, but it was like a couple $1,000s. It wasn't 300 grand. You don't have to lose your entire life savings to learn a lesson. You don't have to go through this much pain to learn a lesson. I think it's a good attitude to learn from your mistakes, but you can't say that you needed to spend $300,000 for this lesson. And you don't need to learn from your own mistakes. You can learn from others. We're all learning from you. He says, when I lost the money, the thing that I regretted was actually not losing the money. I realized I just had no other passions at all. For 3 years now, all I've done is work. I can't think of one weekend when I was just having fun. How stupid is that? That is pretty dumb. If you're only focused on money all the time, that is a problem. And it's going to make it so you probably have less money as well. You have to wrap in family and friends and activities and doing things outside of just things that money can buy. You have to have other aspects in your life. So a couple things that I want to highlight. The first thing is you don't have to go through this type of pain to learn these lessons. You can read about it. You can study it. You can see what works and what doesn't over long periods of time. There's so many stories like this of people getting suckered into short-term gains and losing a lot of money, going through incredibly difficult experiences that are unnecessary. He says that if he went back, he would do it again or whatever. That's not accurate. He can learn his lesson without losing $300,000. That's just not necessary. And we can learn from this too. The second thing is to not be greedy, not to this extent, to not have FOMO drive your decisions. There's going to be some people that hit it big doing something that generates a lot of FOMO because they get highlighted. That is survivorship bias. It's happening all the time on social media. And then the final thing I'd like to point out is at no point in this entire story was he investing. None of this resembles investing. This is gambling from day one. He was betting on AMC, betting on something else, betting on silver, and then betting 100% of his portfolio on Alibaba with leverage, time-sensitive options. That's gambling. This is a gambling attitude, and he's possibly addicted to gambling, and he's using the stock market as a guise for gambling, saying it's investing. And I see this become more common. There's brokerages saying, do you want to invest in Shiba Inu or Floki Inu? That's not investing. If you're buying Shiba Inu or Floki Inu, you're doing a speculative gamble. That's not an investment. Investment's when you buy something with equity. You buy something where you have ownership of a business, something that will grow and generate revenues over time. Shiba Inu or Floki Inu have no thesis, no fundamentals. Nothing's real. It's just money hoping that other people buy the same thing. There's no utility behind it. So what he's doing is what a lot of people are doing now. They're saying they're investing when in reality, what they're doing is gambling. So that's all for this video. I hope you enjoyed. If you like these type of reaction videos going over different stories, let me know, and I might do more of them in the future.